Hello everyone, welcome back to EQSIS. In this video, I'll be sharing my thought process on how I see markets post RBI policy meet. RBI reduced repo rate by 50 basis point that will eventually infuse some liquidity into the system. For those who are very new to these terms, let me explain it in one line. We as a borrower tends to borrow money from bank. And if bank wants to borrow money, they will borrow it from RBI. So that interest what they charge for the bank is the repo rate, and that got reduced. In turn, the bank cost of borrowing will eventually get reduced. Some banks tends to carry forward that to their customers, but eventually they will have slightly higher margin due to this particular impact. And not just that, as a common man, the rate of interest may go down when it comes to a borrowing. But if you are someone who make deposits, very sorry for you, because your cost of deposit, the returns what you get out of deposits can also reduce because of this. As a result, many people start liking stock market than the fixed income products. That is the impact whenever the repo rate gets reduced. So lot of money can come to stock market over the fixed income products because of this, and the bank will have a better margins. Very interestingly, the real estate, one of the primary beneficiary because of rate cuts, because most of the real estates are sold only on borrowings, right? So borrowings now got reduced interest rate. So most people start liking that particular area because the cost of buying real estate gone down because of this particular impact. So today we will be looking at it in a greater detail, not from a fundamental analysis perspective, but from a technical analysis perspective, and not from a long-term perspective, but from a short-term trading perspective. Myself, Murugan, I'm a SEBI registered research analyst. I'll be sharing my thought process by taking few companies here, but these companies are not necessarily our recommendations here. Rather, we are just giving you the outline about it. So rather to take trading decisions, I wish the viewers to do follow the due diligence. And with respect to any regulatory disclosures, we have put it towards the end of this video. Make sure that you refer that before you take any actions on the same. Let's quickly get started. So I'll be using the stock screener from EQSIS website. To find it, you can go to EQSIS.com. There you find a research tool. There you find a stock analysis, EOD stock screener. So once you get into this, you have a lot of parameters by which you can sort out the companies. Interestingly, let me give you first the thought process, how I got into these company list. See, the very first filter that I prefer is top traded and sorted based on deliveries. Okay. So if I look at the top traded companies, these companies are highly liquid. The companies are highly traded by many traders. Okay. Eventually the top names, and that is sorted based on the delivery volume. So where we have Axis Bank, ICICI Bank, HDFC Bank, are the companies have traded by most of the people and got those shares got delivered. So interestingly, Axis Bank, ICICI Bank, HDFC Bank are coming into the top list just by using a couple of one filter and one sort options, that top traded and delivery volume. So that's, keep it on your mind. The other one is looking at the volume search. See, there is a difference between top traded and volume search. The volume search talks about the list of companies have gained a good traction of volume over its previous days. Okay, so when compared to my recent days, today is my finest volume, then it comes under volume search. When compared to other companies, today I had, when compared to other companies, I have a lot of volume, that comes under top traded. So I hope I've explained the difference. If you need, probably you can look back and spend some more time in understanding it. So now I'm going back to the volume search. Okay. So if I get into the volume search, I get the companies here. Am I right? And then I'm looking at the companies which are far from moving average. The reason why I take this, because any company which moved drastically from the moving average, then it shows that there is a strong momentum now. Otherwise, mostly stocks revolves around the moving average. Unless otherwise there is a strong momentum, it tends to move beyond the the comfort zones. And if it has a scope of reversal, probably it can have a reversal. Sometime it can even continue to move forward as well. But coming back to it, I see there is a Prestige, DLF, Godrej Properties. Okay. These are the top real estate companies. As I already told you that the RBI rate cut will have a very positive impact, not just on banks, but also in real estates. Am I right? So coming back to the real estate, a Prestige, DLF, Godrej properties have got 5%, 6%, and 6%. So these companies have taken a lot more positively than the banking stocks, because if you look at the bank here, okay, the banks like Axis Bank, ICICI Bank, HDFC Bank have taken it just about a 1 or 2%, whereas the real estate companies have got a 2x returns on Friday post policy meet than the bank. So that's the baseline understanding on it. Let's look into the charts and we'll see what exactly the chart says. Let me begin by taking the sectors here. See, by any chance, if you want to filter the stocks based on industry, you can still filter the stocks based on industry. You have financial services and you can scroll down and get into real estate as well. Okay. Now coming back to the top traded here, let's first get into Axis Bank. Okay. So if you look into Axis Bank here, look at this. After an impulsive rally here, and the stock is actually consolidating it. Okay, and this day we had a high volume along with a kind of engulfing behavior. So this consolidation may get terminated out of this, but it's too early to speculate because we have a few other company better than Axis Bank with respect to banking itself, which is another one is ICICI Bank. But ICICI Bank did react less when compared to Axis Bank, okay, on the policy day, because if you look at the Axis Bank, the day before it was deep negative, whereas if you look at the ICICI Bank, a day before itself a good rally. So it's one that we need to understand that the Axis Bank and ICICI Bank did perform relatively at equivalent note post and pre policy meet. Okay, let me come back to the HDFC Bank here as well. So the three charts, let's keep it aside. Okay, HDFC Bank, undoubtedly we have this as a gap. Okay, and the stock did consolidate after a good rally here. So the stock formed a bearish engulfing and it did fail here because the stock didn't go down. Rather, now it is heading to break this particular area. So a stock about 2000 looks very attractive to have a bullish view. And on the downside, we can have anything below 1900. Accordingly, we can form strategies with respect to HDFC Bank. And HDFC Bank did fairly well with respect to other two banks in the technical formations. But coming back to the real estates here, for a real estate, like you can go to a volume search, okay, and then probably you can pick up based on around 70s or even a far from moving average. Those two generally gives you a strong momentum. So that comes up with Prestige, DLF, Godrej. Let's get into Prestige first. Look, a Prestige a kind of bottomed out this particular scenario. So if someone wants to know what happened on Prestige, okay, it's all the impulsive bearish move here, okay, and here you see a corrective bearish move here. And if I take RSI indicator, which talks about momentum, you see that the momentum loss happened here because it witnessed a kind of a positive divergence because it formed the lower lows and RSI forms a higher highs. So this whole story got into a kind of muted scenario. But now the reality is RSI is well above 70. You need to look into one detail here with respect to Prestige, because these are the two factors that I specifically look into it. One is about bearish engulfing, okay, and meanwhile that same bearish engulfing time the RSI was touching 70 and hitting below. Ideally a great time to go short below this level, but it didn't actually slide down, rather started moving up. So a short is something that we anticipate, but it didn't happen because the price didn't break the bottom and it didn't head further lower. Rather, it straight away broke the high and extend further, and then it rallied further on the policy day as well. So what we see with respect to Prestige is that it shows some strong momentum is happening. So what we expect from Prestige is it can one way either extend further or it can consolidate a while and extend further. So over bank, we have a lot more clarity with respect to Prestige to move forward. let's see how we can form an option strategy here. So to do that, what you can do is you can go to EQSIS website. There you have a section called apps. There you see primer. So if you get into a primer, it has a lot of research tools. Now where you have to get into it, go to research tools. Underneath you see option strategy builder and create a strategy. All you need is an Upstock trading account to log in this at free. So you can go to change a company here and go to prestige. Okay, take a prestige here and allow this to open option chain. As I already told you that the market did extend from 1500 to 1700 in a short span of time. So you have less out of the money call options. So it gives you a limited scope to actually form strategies, but allow this to settle here, and then NSE may create few more strikes. Then it gives you a better comfort to form it. But how we look into it is the market tends to slightly go up. Okay, so if you are having a positive expectation but don't want to take much of negative area, okay, what you can actually do is you can buy at the money call options, and then probably you can sell out of the money options. Okay, look at this. If you do so, you are forming a kind of bull spread, which is kind of a 1:1 a kind of risk reward. But rather what we can actually do here is you make it as a ratio spread. Okay, if you make this as ratio spread here, and your break even comes on top, so if market makes a very good rally, you will be in a panic mode, but you don't want a downside cushion to this extent. So what we can do, due to lack of strike price, so rather you can buy 1700, okay, 1700 strike price to buy, and then you buy 1760 call options to sell. In a way, you're forming a kind of credit spread, which allows market to go up to make profit, but on the downside, you're limiting risk. Rather, you will be in a credit spread of 8 rupees, and this comes with a lot size of 325. So you will have a close to 2005 as a minimum profit when market goes down, and if market goes up, you end up making close to 22,376 as a profit. But remember, if market rallies on upside, you will have a risk. So there is one another way that you can handle it is, if market gives you a MTM loss of anything more than, let's say, your risk reward of 10 points or 12 points per unit. So in a lot size of 325, you multiply this, then you can exit out based on stop loss is a better way to handle this particular strategy. Or those who expect the consolidation to happen, you can even form this inverse by getting into 1700 call option and sell this into 2 lots. Okay, so if you do so, what happens on the upside, you take a limited profit but guaranteed profit. But if market consolidates on the lower side, you end up making a kind of a good profit. But this is true provided you are ultra bullish on the market to play around, because you don't want the downside consolidation to happen where your risk is quite high for you to form this. So I hope I've given you an idea that how I got into the RBI policy to confirm the liquidity, and that gets into a bank to a real estate, and why real estate with respect to prestige, and how we form strategies. Hope you find this particular video useful, and if you like this video, do subscribe, because we post a weekly one video of a greater research on this, and we also post on a daily basis between Monday and Friday about a short-term updates. And wishing you all the best, and do follow our disclaimers and take trades wisely, and give your opinions in the comment section. Thank you. Thanks for watching this video to this extent.